You are now tuned in to the PPC podcast. Subscribe now for more exclusive content.
Episode 3. Here we go. So, welcome to the PPC podcast. Thank you for being here today. My name is Kobbii and Matt.
My name's Matt Marsh.
And as we do, we're here sitting down after the bank rate decision. Going to have a conversation about what's going on in the economy at the moment and how it's affecting the local market. Obviously, Matt, I've seen that you've been busy. Yesterday, I saw you sold 3 properties yesterday. Yeah. Nice.
Going all right.
Killing it.
Yeah.
Nice. We'll come on to a bit of a conversation about that, actually. Let's get straight into it then. So, the average price of property in Portsmouth as of August 2024 is currently at £224,895.
Okay.
This is 4.3% lower than the previous year. Now, I've mentioned this before, but just to say, I get this information from the HM Land Registry. They update their results every once in a while. So this is the number they've got there currently, and they're at August because they can only go 2 months behind.
The Land Registry typically takes around about 6 to 8 weeks to update.
So that's where the number is for now. Now, as of April and June, currently this year, they've recorded the least amount of sales in the year. So it's 105 in April and 102 in June. I don't think the highest is much higher than that. 2 years ago, we were looking in the 200s, even pushing up 300s. It was quite busy, but now it's gone down quite a bit.
Hi, it's me again. Be sure to check out our latest bit of content, documenting the struggles between HMO landlords and their student tenants. If you gain some value from it, give it a like and subscribe to the channel. Now, let's get back to the podcast.
I just want to give an overview of the autumn statement that happened on October 30th. We can definitely get into a conversation about this. Now, increases in capital gains tax came from that. Lower rates went from 10% to 18%, and higher rates went from 20% to 24%. And then we've got stamp duty land tax as well. So payable by purchases of additional dwellings and by companies went from 3% to 5%. So that's additional dwellings. And then single rate stamp duty land tax payable by companies or non-natural persons for more than 500,000 went from 15% to 17%. Corporation tax has also been maintained. Is there anything else you want to add to that regards to property?
Only the reintroduction of stamp duty as of the new tax year, where it was suspended at 125,000.
Okay.
At the moment it starts at 250,000 for a single dwelling as your only property. It's going to be reintroduced at 125.
Okay.
So that's going to be 2% of any amount between 125 up to 250.
Yep.
And then it goes on to the bands as they are at the moment. So yeah, it's just reintroducing that band again as of the 1st of April.
Okay. So with these changes to the stamp duty land tax and capital gain tax, how did you feel about it? And do you think you'll have a knock-on effect on the local market?
Yeah, I think that there's going to be an impact because obviously the extra stamp duty is going to put some investors off. We already had a couple of people looking at buying properties as additional properties that 1 or 2 have bitten the bullet, and 1 or 2 have said now that their margins have been taken out. It was nominal to start with. They were playing more the long game, but now it's kind of evaporated that. So it's caused a couple of deals to drop out across the board. Yeah. It's just become more expensive to build portfolio landlords and things like that. I think it was always going to be a tough budget. I wasn't expecting many breaks in there for anything. I don't think it's necessarily the best budget. There's lots and lots of holes we could pick through it.
Yeah.
However, I believe personally, and I know it's easy for me to say that, working in property, working in finance, but I think that the economy starts with property and finance, because everything is a knock-on
100%.
effect from there.
Yeah.
So it would have been nice to have seen some breaks in there, something that was more encouraging to help spending,
Yes.
which invariably helps taxes. But I think it's squeezing landlords and investors, which do offer a viable path to a lot of people who are renters looking to rent. So it's not the best budget in the world, but I understand why they've done it, because they're trying to refill the coffers.
Yeah. That being said, we hosted an event on the day. Everyone that was there expected it to be a lot worse than it actually was.
Yeah.
What are your thoughts on that?
I think it depends who you are. I think if you're Joe Bloggs, you're employed and you're it's a very Labour budget.
Yes,
definitely. They've gone to help the lowest in society, which has always been their MO, and that's fine, and I get that. But I do think what it does is it doesn't look at the bigger picture in respect of it squeezes business owners. It squeezes. I think it's quite a short-sighted budget in my eyes, and the reason why I say that is if I employ somebody, the minimum wage, not that I want to pay somebody minimum wage, I've never paid anybody minimum wage, but what it's done is it's devalued any pay increase that I've given to my team members and staff.
Yeah.
Because minimum wage has been accelerated almost quicker than I can keep up pay rises, so it's almost wiped that out. Also, yes, I understand the reasons behind why there's a minimum wage, but it now becomes a choice for an employer whether they decide to work smarter, cut costs, because in real terms, minimum wage going back 6-7 years ago was about 15-16 grand, and now it's pushing 25 grand. So if you've got 10 members of staff, you've just added over 100 grand to somebody's wage bill, and that's a hefty cost to go through. And you end up thinking, right, well, maybe I don't recruit somebody else, or I have to think of smarter ways to be able to get more out of my staff, and then you have the more fatigued staff, and the quality of what you've got has gone down, or you can't grow as quickly. The balance for me has been slightly incorrect, with there being no breaks as well for the people that are employing everybody. We have a really positive number of, in Portsmouth specifically, of aspiring business owners, small businesses, and I think that begins to suffocate that. So it then means that we can't grow as well.
And it's interesting you're saying that as well, in terms of more pressure on staff, because obviously they're going to have to pick up more because there's less staff. And then even things like mental health nowadays. I don't know, I just see a lot of people. I'm not saying I want to word this right. I'm not saying that, people are making excuses or anything like that, but the mental health card seems to be getting pulled a lot these days.
100%.
And I think this is only going to encourage it that much more.
I agree.
Yeah.
I think that the workload, when you could have spread the workload a little easier because you were able to afford staff to do things, now you have to make staff more multifaceted, more things that they've got to juggle and spin on their plate, more pressure it invites.
Of course.
And that invariably links to you can only pay the going rate for the marketplace or what the business can afford. Because if the business can't afford it, then there's no jobs. So the business has got to be able to afford it. The business can afford it because you've got the people and they're productive and they're healthy and they're happy. That's great. But for instance, if you have a office admin, you would normally suggest an office admin. There's a good office admin would normally get around £25,000 to £30,000 a year. Okay, but when minimum wage is right up there, and you've got an office junior, and you've had somebody who's worked in office space, and now they've been doing the job 7-8 years, and they're going, well, hang on, I should be getting paid more for this, but the business then can't say, well, if I pay you more, I've got to pay a few other people a lot more money, and if they've got to pay a lot of other people more money, then all of a sudden that 2-3 grand increase they've given that one manager, they've had to give to 2-3 managers, which has now inflated that. And it now means that, well, hang on, we actually can't employ the extra person that we need to help you, because by paying you all pay rises, we now can't actually afford the extra admin to support you. So the balancing act of it is a lot more difficult. And it does put a mental load on the business owner, that then it all trickles down, that then defers to the managers, that then defers to the staff.
It just keeps going down. To be honest, it's very interesting you're saying this. I was going to bring this up later. So unemployment from Q2 to Q3 has actually increased. It's gone from 4% to 4.3%. And this comes down to the increases in national insurance contributions and minimum wage, especially in the private sector. It seems to be hurting. I think I've seen something about Sainsbury's, Marks and Spencer's, certain companies anyway that are not hiring anymore, and actually job vacancies has actually gone down quite a bit now as well. And this is all off the back of that. Obviously, when it comes to government jobs and, you know, the bonuses that people are getting thrown there, you know, that is, I guess that's happening in some kind of way, and the money can flow better there. But when it comes to the private sector, even when you're looking at these big companies, you know, and you're seeing that, let alone these smaller ones, like the ones that you're running, for example. So it's, I don't know, it's a very interesting time.
I think if you take the NHS, and I'm not suggesting for a second that nurses, doctors shouldn't get paid what they're worth. However, we have to remember that there is a knock-on effect. So if the NHS then says, right, we've done a 10% increase for everybody, for example, and their wage bill was $1 billion, now you've just added another 100 million to that wage bill, and that's only going to put extra pressure on them. And then what they've gone is, right, in order to cost out that extra money that we're giving you, we've got to cut it from somewhere, or put the taxes up elsewhere. In order to counterbalance it. Now, if you're a smaller business or these private companies, there's some other things that you could add into the mix as well. Like AI is big now, so all of a sudden, certain jobs are getting lost to technology as technology gets more efficient, and people become less efficient. And then people are thinking, because their costs are being squeezed, because employers are paying more national insurance and having to pay more for the materials, cost of living, etc. anyway, and being taxed more heavily. It just means that all of a sudden, how are they paying for it? And invariably, the biggest cost for most businesses is wages, and that's where the first cuts get made. And as we can all see, if you start to cut down the sales force, like if we look at the NHS, if you cut down the number of doctors or policemen that are out there, then all of a sudden the force or the health service doesn't run as well. And anybody that's tried to get, let alone a mortgage application through, but any kind of application where it used to be call in and it'd be done quite quickly, it's now taking a lot longer. And that's because shrinking sales force. I was even going to say that about infrastructure. I think that's where you're kind of it's kind of being sacrificed in that respect. Because infrastructure needs to sort of like be built, and it's to a certain, I don't know. When I'm thinking about infrastructure, I'm thinking about NHS. I don't really want to go there. We'll stay on that hot topic. We love you nurses and doctors.
We really do. I don't want to go there, but that's where my mind goes when it comes to that kind of thing. All right, before we veer off, let me bring it back to inflation. So seems to be at a good place at the moment. CPI is currently at 1.7%. However, with owner-occupier costs attached, so that's CPIH, it's at 2.6%. Now, owner-occupier costs, again, this is the cost associated with one's home, is currently yet at another peak of 7.2%. Now, in our last episode, we mentioned that, well, Matt mentioned that it will probably take a good 18 months to get the bank rate down to where it needs to be in order for things to start flowing again and people to start spending money and that kind of thing, which could create a domino effect on owner-occupier costs. You made a post just after we did that podcast about you going to HSBC.
Correct.
Do you want to tell us a little bit more about that?
Yeah, sure. So I was invited up to HSBC in Canary Wharf, and we had a meeting with the mortgage team up there, and they told us what their forecast was until January 2026. and they revised their figure for where they felt the Bank of England base rate was going to go to, down to a staggering 2.75% for the Bank of England's base rate. I took a sharp breath. I was like, that seems very, very ambitious.
It does.
My personal feeling, and these are bigger brains than mine, that were looking at the forecast at 2.75% for the bank base rate, would have meant the base rate drop in November as we got, and I think most of us expected that.
Yeah.
But now there's 8 Bank of England announcements a year.
Yeah.
So that means it's going to drop by 0.25% every single time until January. Now, you can have all the computers and the algorithms in the world.
I just did what you did.
I think that it's going to be... What it doesn't cater for is chaos. So the thing that I would always be measured on is when they making Bank of England predictions 2022, early 2022, no one was predicting it was going to go all the way up to 5.25% and then come down. We didn't know when it was going to stop.
Yeah.
They were still offering fixed rates at 2%, 1%, early 2021 to 2022. The forecasts need to allow for things like fires, floods, famines, economical disasters, governments changing, and things like that, because it changes how the power works and how money's spent, because that then alters a lot. I still think the Bank of England base rate will come down, but I think optimistically, I was hoping that the Bank of England base rate would aim at around 3.5%, maybe 3.25% if we were lucky.
Yeah.
But then we'd see the lenders' adjustments for the rates that they're charging us to fall in line with we actually started to be a little bit above the Bank of England base rate rather than below it, where it is at the moment.
Yeah.
And ironically, in the last week, I've seen more lenders increase their rates rather than decrease their rates, despite the fact there was a Bank of England base rate reduction.
Interesting. When you say increase, whereabouts are we talking now?
Not massive. So, for example, we were getting offered rates with a decent sized deposit. You could get a 5-year fixed rate as low as, say, 3.69%, 3.7%, way below where the base rate is. Bearing in mind, it's only just come down to 4.75%. I personally think that's got a little bit to do with how the elections landed in America.
Yeah.
Because we now know what kind of government is going to be in power over there. I think that also lenders are thinking maybe we have been a little bit over optimistic in where we think the rates are going to go. Maybe we need to be a little bit more tempered with where we think rates are going to go, because we've also had the budget announced as well.
Of course.
So I think that now they know these things, there's maybe less spending going to be happening, which is why we need to cater for chaos in how we're thinking about where rates are going to go, because there's so many little things that can alter it. So I still feel like that 3.5 is good.
Why do you think HSBC came up with that figure?
I think it's them being optimistic. I think the forecast looks strong. I think if they're looking at a hard government dedicated to keeping the inflation down, more stability, more spending. I think we've got over the hangover of things like COVID and things like that. It shocked me to think that come March next year, it'll be 5 years since we went into lockdown. That feels like a long time ago now.
Damn, yeah, when you say it that way, yeah.
So I think that it's trying to get everything back and moving again. And I think that we've almost been through the pain bit. And if you look at every economical cycle, it generally runs in 8-year shifts.
Yeah.
And we've come out of one, there's a recovery period, and it grows, and then it drops. So I think that maybe that's how they're looking at it. Is it overly simplified? They'll probably make it look very, very complicated. But I think if everything is great and everything is lovely, then maybe we'll see rates down that low. But again, cater for chaos.
Yeah.
But, I think that's good. I think that it will keep people buying, selling houses. Like I say, we've been quite good with getting houses sold recently.
Yeah.
I've been doing a lot of mortgages recently because they're becoming slightly more affordable, or at least there's stability in that rates haven't changed a great deal on what's being offered in the last 2-3 months. So people are getting more used to this is the rates now.
Yeah.
So right, let's just get on with things rather than waiting with bated breath. Is how much further they're going to come down? Are they going to go up? What's happening with house prices? I think there's much more of a realistic take on this is where we are now.
Yeah. Okay. Um, I'm going to take this conversation in a different direction, but to be honest, it ties in with what we were saying about owner-occupier cost, and then things like minimum wage increasing
Yeah.
and national insurance contributions. So I've heard it being spoken about on other platforms as well. But as a professional who handles finances, I'm going to ask you a few questions.
Yep.
And we can discuss the answers as we go. Yeah.
Yeah, of course.
All right. So I want to talk about the average wage versus the average price of property.
Yeah.
And the history of it.
Okay.
Yeah. So we're going to start 1990.
Okay.
So 1990.
Yeah.
What would you say the average wage was?
Average wage,
If you remember
in 90 I am that old. 1990, I reckon it was probably about 20 grand a year, let's just say.
20 grand a year.
Yeah,
Okay.
yeah.
So the average house price in England at that time was 43,500.
Wow. Okay.
Yeah. All right. Year 2000. Average wage
Average wage, about 28.
28.
Yeah.
Okay. Average house price was 54,000
In 2000. Wow.
in
Okay.
England.
Yeah.
Yeah.
Okay.
And that's what, 24 years ago. Yeah.
Yeah.
Okay. 2010 average wage.
Average wage in 2010, about 34.
Okay. Average house price in Portsmouth.
Yeah.
152,000.
That's a jump.
Big jump.
Yeah.
So you see where I'm going with this.
Yeah.
So today,
Yeah.
what would you say average wage?
Average wage, we've got, it depends on what kind of average you're taking. I've gone on for the Joe blogs with higher management, lower management, and all the rest of it. Most people will be on the lower tier, but you are balanced out by some bigger wages. I would say average wage, 39, 40 grand.
Okay. And then we've just said that the average price of property in Portsmouth at the moment is £224,895. So you see where I'm going with this. It's the fact that the wages are definitely nowhere near increasing the way property prices have.
Yep.
Especially, and then on top of that, the conversation that we had in the first episode that we did, and we were talking about how it's become a lot more difficult to get mortgages since the credit crunch, especially with everything that they've tightened up. So I want to get your thoughts on it, but also I just feel personally, just looking at all this, that we're getting to a point where it's going to be very difficult for people to afford the houses that they live in.
Yeah.
I don't know whether, for example, I know I've got family in Germany. I think there's particular places in Germany where the government actually give you a house,
Yeah.
you rent it, you've got your job, and your job is kind of, how do I say it? The rent that you're paying matches the job that you have in that respect. And then you're obviously able to live a certain way. You can't be too extravagant with your living, but you're able to get your food and that sort of stuff. I've been digging in different holes, looking at things like 15-minute cities and all these little things that are sort of out there that people are having conversations about. I just feel like we're going towards a new place. Some people may call it scary. Some people might be all right with it. Yeah. I'm not here to, I don't want to put too much of my opinion on it. I'm just going to leave it out there and then for the people to discuss. What are your thoughts on this?
Okay, right. So there's a few things. Firstly, when mortgages were being done, say 90s, early 2000s, lenders' income multiples, as you were, would be like 3 times. Okay. And nowadays you've got lenders doing typically 4.5, but some doing 5, 5.5, even 6 in some situations. But what I'm finding is I'm getting some clients now that I'll say, you qualify for the mortgage, you can borrow that much, and they're going, but I don't want to pay that much. So it could be, look, you can have a 300 grand mortgage, it's going to be at 4.5%. This is now what it costs, because they were used to paying 1% or so. And then they go, wow, I don't want to pay
that.
that. I don't want to see that as reasonable.
Yeah.
Because that could be like a £2,500 mortgage. That's tough. So the aspiration is to have that kind of house, but then the realism is, are we going to be able to afford it? They can afford it on paper,
Yeah.
but they can't. But they don't want to pay because they don't perceive the value there.
Yeah.
So there's that aspect. I think the easier thing was back in the 90s and early 2000s is when the house prices were lower and the income was lower, but it was more of a wage that you could obtain. You could live on your own, but everything is based upon demand as well.
Yeah.
The explosion in house prices. I mean, if you ask anybody what a buy-to-let mortgage was before 2000, they would have looked at
Yeah.
you funny.
Yeah.
Then you had the explosion in house prices, as we saw from 2000 to 2010. Lo and behold, you had a load of landlords appear. And they go, great, we want loads of this money. And then because all of a sudden there was an explosion in mortgages and people getting on mortgages, that's when we had that bit where we go, hang on a second, we've got this really unstable product, which banks got on the back of, which caused the credit crash and everything else. Then it got regulated, it's tidied it up a little bit, but the rates were still so low. And because the rates stayed low so long, the house prices continued to increase because people were like, I want to buy lots of properties.
Yes.
I want to own my own house because it felt in reach and reasonable. And because there was a demand, the house prices kept going up. Now all of a sudden, we've seen house prices be quite steady now. Since the rates have stopped, house prices have remained quite steady. But it's changing people's way of thinking because what they've always thought is, well, house prices always go up. My house should be worth this. Or what we mentioned in the last episode is that, well, if I spent X amount on it, plus I've improved it with Y money, it should equal Z. But they need to cater for, well, what's the demand? Has that been catered and factored into your costing? Which goes into what the drop is. And part of that is I can't afford it. So therefore I'm not going to buy it. So it might be desirable, I might want it, might be a lovely property, but I can't afford to spend that anymore, which is why we've seen the drop in house prices. I do think that there were pros and cons of, I mean, can't get a time machine, because if you'd have said to everybody, here's a time machine with a bag of cash, the first thing they'd have done was go, well, I'm going to buy loads of property. Yeah, absolutely. But unfortunately, in hindsight, we can't amend that. I think maybe things will have to change to a new normal.
Yeah.
And then we'll be able to see how house prices react from there. And I think it's going to need a little bit more sensible pricing, sensible attitude towards borrowing.
100%.
And the cost of living is the cost of living at the end of the day. It's the only alternative is to move either to an area of the country where you don't necessarily want to be, or there isn't as much opportunity. The reason why the south of England and London are more expensive is because that's where the opportunity and the money is. You go to Middlesbrough if you want to. It's you're moving away from what you want. And using the German model as an example, and obviously the German economy is a good economy, it works well, but are there as many entrepreneurs? Are there as many small business owners? Because we have an aspirational society where people feel like, well, I can go for it, I can work for it, I can earn it. It's risk and reward. It's more risky, but the rewards are there to be had.
More of a free will type thing. Because I know over there, for example, one thing that like shocked a few of my family members when they've been out there is if they've got roadworks, that gets done in the night. So that gets done overnight. They have all their workers out overnight doing that job, and that's that. In my head, that must be obviously either a high level government contract or it's the government themselves that are doing that. So in that respect, everybody's working for either one particular company or for the government. Respect, they're also giving you a house. So it kind of just ties in your.
Do you know what kind of society that sounds like? It's a very communist society.
There we go.
Okay, and obviously it's not communism over in Germany.
Of course not.
But half of the country used to be not so long ago. But I do think that, growing up, you're taught that is a dirty word, but the state looks after you. Now, if you were to ask the general public, do you feel the government looks after you in the UK? They're going to, my roads aren't done.
Yeah,
The waiting
yeah,
lists
yeah,
are too
yeah,
long.
yeah.
This is, and they're not happy.
Yeah, yeah.
Not happy with the government. Most of us felt like in the last election, and if we look across the pond, it's probably very similar there. And they're thinking, well, I've got the choice between that and that, and I don't like either.
Yeah, yeah, yeah.
I do have smaller other choices, but I just don't see them as viable, or it's a wasted vote. So I've got the choice between these two, really, and the third is a protest vote. And it's the lack of decent options. Where if you had I'm not suggesting you go communist. I'm not saying that.
Yeah.
But if you had a government that worked to a basis where we're not constantly getting roadworks closed. The other problem is because everything's based around money and how local governments are funded. So all of a sudden we get near the end of a tax year and they go, oh, we don't actually need to spend all the money that we've got, but we're going to, otherwise they won't give us the same money next time round. It's not a proper, and it's just kind of like going, well, if I give my kid pocket money and he doesn't spend it, and I feel, oh, I don't need to give him as much next time.
That doesn't make sense.
I need to make sure I spend it so I get the same again next year.
Yeah.
And it's irresponsible. And you know, we're all sick and tired of. We want the roadworks to be done, but then what we don't want to do is drive past the same roadworks and never see anybody working on them again.
That's it.
There's many things that are wrong with this country, but that doesn't mean that they're right in other countries. They just have a different way. But what are you winning against what you're losing?
Yeah.
Are you losing some freedom because the government is going to do it, or are you losing the fact that the roads are going to be closed for longer?
Yeah. Okay. So that kind of ties in to the next thing. So what I'm trying to do is get you guys involved in our conversations, right? Obviously, we've just started this podcast, so I'm only getting a few comments here and there. However, there was a short, I should say, on YouTube that I put up. Obviously, it's going to be you talking about mortgages, right?
Yeah. And
a comment came back. It said, "Do not borrow. Mortgage literally means death pledge." This is probably the best comment I've got so far.
Yeah.
So I thought, you know what? Let me pull that out and bring it in today.
Yeah.
Now, if we were to break down the word mortgage,
Yeah.
he's actually not wrong.
Yeah.
Necessarily.
Yeah.
What are your thoughts?
Okay. Right. If you look at the most wealthy people in society, right? They borrow heavily, or they buy things with things that aren't real. So, for example, I will allocate my share of stocks towards buying that asset. Look at Man United. Look at Twitter with Elon Musk. Look how they acquired wealth. They've done it through, well, I've got shares, I'm going to put those up. They're not real, they're not tangible, but they can't be taxed. So a mortgage, you don't get taxed on debt, right?
Yeah.
So it could, while you're looking at it from a short point of view of, right, well, if I borrow 100,000 at 4% and I do it for a long time, then I look at the amount of interest I've paid and go, oh my God. But if I've used nothing but cash to buy it, and then I've got this asset, taxman's going, I'll have some of that, thanks. And they'll tax it. And the tax is sometimes a heavier burden than what you would have paid in interest, right? So the word mortgage is just unfortunate that the way that it's named, but it's still borrowing at the end of the day. And sometimes it's a case of, can I achieve the aim through borrowing, or can I do it with, say, now if you're in a fortunate enough position that you can buy, and you could just go, right, but I'm going to buy that house for £200,000, and I've got the cash to do it. Now that's not true for most of us. So we'll have to go, well, how am I going to do it? My only alternative then is to rent, but I've got nothing at the end of it. And sometimes that can be favourable, but I would suggest in more cases than not, if you take generational wealth, for example. So, for instance, if I start off and I have nothing, I buy a house, and then by the time I get old and die, I sell it, my family inherit it, and now they've got an asset to start with. And from that, now they've got money because of assets trickle down through my children, children's children, so as I can educate them better. I can invest in them more. I can provide for them more. But I've had to do that, me, number one, starting that with having to take a mortgage out, because the only way I could get on the property land is the only way I could acquire an asset. So I understand that some people want to stick the money under the bed because they don't want to save it. They don't want them to get their interest, but then it gets taken out by inflation. You've got
Sure.
so if borrowing ultimately achieves the aim, and when you look at all the variables and you think to yourself, right, if I buy that for 200,000, and then house prices go up as they have done, if we look from 1990 to now,
yeah.
and we go, right, well, if my granddad bought that house and now it's worth this much and they sell it, yes, if I look at how much I could get for £100,000 then, or what the value of £100,000 was back in 1990, and what does £100,000 get me now? Obviously, I know that's changed, but did I even have £100,000 in 1990? But I have it now.
To a degree,
So does it obtain an objective for you? Does it get what you want? Now, obviously, there is a line and a balance to it where you don't want to keep borrowing, because if you're constantly borrowing up and beyond your means, that's when it's going to suffocate you. But if you use it wisely and smartly, and you live within your means of what you're borrowing, then it's always going to serve you right. Just use it as a tool, like anything else. Use it smartly.
That's it.
And you're all good. So I don't necessarily go to the extreme of it being the death tax, but it's a means to an end, and if it achieves your means and you use it properly, like anything. You know, I'm not going to be a cook and there's a knife I need to use, but then hold it with the wrong end and go, oh, why is it hurting
me? Yeah.
You've got to be more sensible with how you work it.
Definitely. I'm happy you cleared that up, because it's just for people to kind of understand. I guess, like you say, it's how you use it.
Yeah.
You could use it and it could be a death pledge.
Yeah, absolutely. Yeah.
100%.
If you overextend.
It's definitely, yeah.
And the amount of times I get people that ask me to... It's like tax. Tax is a big one. So people despise paying tax. And I don't think there's anybody who loves paying tax. But that's, But especially when we talk about the roads and nurses and everything else earlier. But for example...
I can think of a few people anyway.
Yeah. I have people that won't pay tax that I've spoke with on their mortgages and things like that, because they don't want to pay tax and they get obsessed with not paying tax. But they don't understand why they're not paying tax. They just think, well, I don't want to pay 4, 5, 10 grand in tax. But what they're failing to see, if they actually pay the tax, so if they've earned 100 grand and they go, right, that's a hefty bill, I don't really want to pay it, but now all of a sudden I can get finance to buy this, acquire that, get this job, get that job. I now look so much more affluent, productive. I can obtain more finance. That now enables me to grow this business, to acquire this, buy that house, do these things. It opens so many doors. And I'm not saying go out and pay loads and loads of tax. Pay the appropriate amount of tax and use it properly, and then see how many more doors open. So, for example, if I was an investor and they said, right, they want to take out a loan for a business, this and they were using me as a guarantee, and they say, yeah, well, I can see this guy has got more than enough income that comes in, not hidden in, well, this is my bank statement for this month, or I could earn this. Here it is, laid down, black and white, declared. They'll go, right, okay, well, we're happy to invest in this person starting this new business. We're happy to lend the money to buy that house. Now they've got that bigger house, they can now use part of that to do X, Y, and Z. They now have more potential to grow. Whereas because I'm so focused on not paying tax,
it limits you.
Yeah, absolutely.
Yeah.
So sometimes swallow the bill, use it appropriately, achieve the aim. And I think that's always the thing. Look at the bigger picture. What do you want to achieve? To pay interest or pay tax? No one wants to pay these things willingly. But when you think, does it achieve my aim? And if the answer to that is, well, actually, by doing that, it does achieve the aim. This is what it's cost me. Am I happy with how it's netted out?
Yeah.
That's how I look at it.
I think when we're coming from certain societies and certain places, we can sort of look at this tax thing and be like, nah, I don't want to pay tax. Why am I going to give them my money? Look what they're doing with it. This, and that. But even me growing up, I've had that in my mind.
Yeah,
you know.
yeah.
But I think as I've met the likes of yourself, other people who are investors like Mark Smith when he was talking that time when we did the event, different people that I've been speaking to, and now I'm understanding it a lot better.
Yeah.
And it makes more sense in that respect. Like you say, you can be more productive. There's more potential for you to go out and do more after that. But when you're coming from certain places, you can kind of be closed-minded to that.
And I think it's about thinking about how you're moving, right? So I don't like how taxes are spent. I drive down the roads, I look at, you know, when I see mess and garbage and roads and all of that, and I'm thinking, it's not just me. We're all paying into this. You're thinking, what am I getting for it?
Yeah.
But then if I change my mindset and thinking, right, well, if I don't like it, but I'm going to make it work for me, right, I've got to pay it because I'm not going to change society, me on my own, or as a group of people, no matter who we put in government, they're going to tax it.
Yeah.
So if I think to myself, right, okay, so I'm going to get taxed, swallow it, get on with it, make it work for me. So I'm going to pay your money. I don't like paying it, but there you go. I've got what I need out of it now, so I can grow. Because that's how I get more power.